Hello, Cleveland, and everyone from everywhere else. Welcome to your 10-minute TA for the day, Monday, March 10th, 2025. We're much lower than I thought we'd be about a month ago, but that's okay. Things still aren't totally in despair. We still have a chance out there, or to reach up there. All right, I'm going to stop rhyming. Let's get into the charts. So what are we seeing? Since I made the video yesterday, well, this bearish div that we were looking at here on the 90-minute chart is actually expanded a bit, sort of. Still going down, see? I can make it more like that. Lower high, lower low, lower low, higher low, higher low, higher low. So yeah, aside from this one, but yeah, higher low, higher low, higher low, and then that, yeah. Anyway, sorry, that's bearish div there. That's still there. Possibly suggesting that we're going to see some more moves to the upside. We're also seeing it's a wonky double bottom. It came down a little bit further than this one bottom, second bottom. If it did play out, well, back up to that 86 level. So hopefully that double bottom plays out up to that 86 level, but that's not necessarily going to happen. We do have this 82 now acting as resistance, this 82 level. Well, technically it's still support until this candle that we're currently in closes underneath of it. So if we see a close under 82 in the next 43 minutes, well then on the 90-minute chart, 82 will have been flipped to resistance, creating another barrier for this move up. The other barrier would be this 85 resistance. Although we talked about this yesterday, when we see a move coming right through it, straight down, usually that means that we'll see a move coming back up pretty quickly. You can also see that in the VRVP. Showing you this before, but on the higher time signatures or the higher time frames, there's a gap here. So we're likely, if we move into the gap, to fly through that gap. So if we can get over 84, then there's a good likelihood that we're going to play right back up to the 86. All right, I'm gonna get rid of the VRVP. The Stokes here are pointing downwards though, so we do need to watch for downwards movements. As long as these are pointing downwards, they can drag the RSI and the price action lower. If that happens, well then this wonky double bottom is completely invalidated, and we need to look out for some lower targets. Which targets? Well, we move over to the 6-hour chart here. We can see that we still haven't gotten to the target of the symmetrical triangle there. Didn't I have something else drawn here? No. We did have this bear flag here that we drew out possibly yesterday, and well, guess what? It hit and it went down to exactly where the bear flag would have had this measured move. Okay, sorry. Moving away from the 90-minute chart. It's moving away from the 90-minute chart. Let's take a move. It's over. Yeah, this is you can see that price action did come up to that 786 and then failed, came back down. You can get rid of that now. Get rid of that fib retracement. So we're watching for this target of the symmetrical triangle to actually hit. Where would that be? That'd be way down here at 73.6. Hopefully it doesn't. The Stokes here are pointing upwards, so if these can catch, or at the very least make their, find a bottom in their oscillation downward and turn back up to oscillate upwards, while price action and RSI stay basically where they're at, we would love to see that, and that would say 86 is coming. Here on the... Yeah, 82 has also not been flipped here on the 6-hour chart either, so still technically support. And with the indicators showing us bullish confluence between these two, a little slightly higher, well, we could say maybe there's a chance for that, as well as this is kind of a double bottom now, isn't it? Yeah, that wick went a little lower, but this is a complex double bottom. It has a kind of weird thing in the middle instead of just a one up, one down, but it's there. Where would that play out to? Well, like we've been saying, 96. So we hope to see that 96 hit. If 96 can play out, well, then we'll get back over the 200 here. We're going to get back over the 200 on the 90 before that. That's hanging out here at 86. So our targets are basically to the 200s on these levels. If we can get over those as well, we'll get back over the 200 here on the daily. We are now under the 200 on the daily. Yeah, man. It's like that. It's like that. Daily, Stokes are pointing down again. They don't seem to be curling to the upside. The RSI is getting kind of low. Getting almost too low for us to keep considering this head and shoulders to be a wonky head and shoulders, but it's there. And the bullish div, is still also here on the daily. So on the daily, there's also a chance for a move up. How high up? Well, 82 and 85 have not been flipped to resistance yet on this chart. In 8 hours, we'll see where this candle closes. If it closes under 82, that'll flip both of them to resistance. If it closes under 85, it'll flip 85 to resistance, creating another barrier for us on the reversal side of things, on the bullish reversal scenario side of things. What else? High volatility all around, although here it's a little bit lower on the 90-minute chart. We need to see this 90-minute chart moving. Let's check out the 22 real quick. Yeah, 22 is ready to oscillate upwards, but the RSI could get caught at its signal line there. If it does, then, well, hey, we're probably not getting back over 82 in the next couple of hours. So let's watch for RSI on the 22 to get over its signal line, and then hopefully can put in some higher highs while the Stokes move upwards. And then price action can hopefully put in some higher highs, because if it doesn't, while RSI does, well, that would be a hidden bearish div. So we need some higher highs. We need to get back up into that 83, 84 range, break up over 84, and make it to 86. Let's look at the 5 minutes. Under the 200 is 2200, 200, under the 200, under the 200 on the 1. 5 minute Stokes look like they're ready to come down. Hopefully they'll just be putting in a double bottom as well. And then we got these double bottom fractals all around. So yeah, we're hoping for a move up to 86 to start, the bullish reversal. But we got to watch for those downsides. Where to? Well, the downside measured move on the symmetrical triangle down to 73.6, 70, we'll just say 74. That would suck. That would pretty much, if we then flipped that 786 retracement here. Where is that at? That's at like 76.1, so 76. If we flip that, then we're in a bear market, man. Well, we're not in a bear market, maybe not, but this bull flag will be invalidated, and it'll be a lot more difficult for us to see the path back to the upside or to new all-time highs. At that point, all we could really hope for is maybe to tap all-time highs again, or come close. But you never know in this market. Anything can happen. I'm just feeling a bit sad because we're under the 200. We are seeing this spin top candle, though. And spin top candles, they do tend to be reversal candles. Can we find another one? Here's one, reversal. Here's one, reversal. Here's one, reversal. Small reversal, but still a reversal. Spin top, a little bigger body, but still reversal, 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 reversal. So yeah, it's likely that we're going to see a reversal from here. The question is how high up. Can we break back over 85, keep those as support? We do have quite a bit of resistance above there as well. We got all of these fib levels. We got all of these yellow lines, these major resistance levels. So we got a long way to make it back to all-time high, if we even can. All right, y'all. Much love. Thank you so much for watching. Much love. See you later.